traders at Axis Bank say there are pockets of demand across short-tenured bonds, with emphasis on the 2026 and 2029 papers, while the medium to long ends of the curve remain muted due to low appetite for the current yields. Daniel Afolabi, Treasury Team Member at Axis Bank, joins me now for more market updates. Daniel, thank you so much for your time on the show today. Let's talk about what has played out within the course of the week. The highlight really is the primary market auction that we saw earlier on Wednesday. Talk about the subscription rate, the volumes we saw play out.
Okay, thank you very much, David, for having me. On Wednesday, we had the DMO auction of the TBOs, and then we had about there was about 182 billion on offer. But there was about 800 billion that was actually being placed by the market participants, right? But so what we saw was an increase from the previous levels. We saw the long end of the curve increasing by about 200 basis points, and we saw that there are a lot of bid from about we had about 182 billion that was being offered by the DMO. So in the next day, we saw that market participants had to. We saw a lot of trade happening because the demands that were not met on that day of the bid, we saw them coming into the secondary markets the next day.
Yes, exactly. That's the highlight of what also panned out yesterday, looking at the need to fill the unmet demands. Let's also talk about what to expect in terms of investor leanings at this point in time. For the bond market, the mid to long end is relatively mute. Talk to us why the 2026 and 2029 papers are investors' favorite at this point in time.
Yes, so what we're seeing is that since the DMO released a new calendar, and that we know that there are about 3 new different bonds that is being offered on the auction. So we've seen a bit of quite demand on the mid to long term end of the curve, but on the short term end of the curve for the 2026 and the 2029 bonds, we're seeing slight interest with about we see them closing at about 11 levels and 13 levels for the 2026 and 2029 papers.
And we're successfully closing the first week of the month of June now. Looking forward to what might likely pan out. How do you see the yield curve patterns play out, and in terms of investor leanings for the rest of the month?
What we're seeing is that a lot of market participants are quite unsure of what the money markets rates are going to be. We're unsure what the posture of the government about. We're seeing people thinking that rates can be as high as double digits. So we're not seeing a lot of interest. But let's see. We're hoping that things would change when we see the new bond coming into the market.
And talking about the currency market now, bringing the conversation within this regard now, within the importers and exporters window, the pressures around demand and supply still continue to linger. Liquidity within that area is a concern. But we're seeing the importers and exporters FX window rates at an all-time low. Tell us a little bit more about what's playing out there.
There's been a lot of news in that market as well. We've seen rates Naira weakened a little bit from the 460 levels to about 470 levels. And what we're expecting is that we expect that the rate will continue to be at these 470 levels, understanding the different news that's going on in the market. But the CBN continues to intervene in the retail auction that we'll be having today, and also the SME and invisible windows that we had sometimes earlier this week.
And investors definitely are keeping their eyes also fixed on the outcome of today's retail auction as well. Let's talk about how that would also shape what would happen later within the course of next week as well.
Okay, so today we expect that the greater attention of the market will be turned to the retail auction, and then we expect starting from next week, we expect that money will start coming back into the windows as market participants starts to trade on the bonds that were on the bills that were issued by the DMO earlier this week.
And Daniel, we're also expecting next week also marks when more forecasts would also be coming in terms of inflation numbers as well. How do you think that might likely rub off on investors?
Well, I think the new administration has said there's a lot of new things being said. I think a lot of investors are just quietly watching, trying to understand exactly where the market is heading. like I said, the bond market is a bit quiet, so we haven't seen a lot of participation there. But I mean, once we see the new numbers, we'll see what the market is looking at and how everybody is thinking about it.
Uncertainty in the market direction is fueling this whole cautious trading pattern. We'll leave the conversation here. Daniel, it's been a pleasure speaking with you. Thank you so much for your time. That was Daniel Afolabi, Treasury Team Member at Access Bank.